Good morning, fellow traders. Today I would like to analyze Euro USD and try to establish the reason why since January the Euro USD seems to be having a downward trend, meaning that the dollar has been gaining strength. If you take a look at DXY, you can see the dollar is in upward trend, and at the same time, if you take a look at the bond, the 10-year yield has been going up ever since. Only at the end of the January, there was a sharp decline of the bond demand. In the other video, I will explain what has actually triggered this. But it is important to backtest our fundamental because it will give us a projection of what will happen in the future. And if similar data outcome are coming out, we will be able to trace the historical data and the likelihood of a similar occurrence to happen. So it's important we backtest our fundamental. So when we go back to our forest factory, that is on Friday, the first Friday of this year, that is January 4th, there was a very good data that came out from United States, and that is the average hourly earning of the month of December, non-farm employment change, and unemployment rate. These data are very crucial in helping a trader to understand the state of the United States economy. As you all know, that US is a big economy, and what happened in USA seems to be having a ripple effect in almost every country in the world. Now, when we try to see how this data actually impacted the market, to start with, we will start with the first data that came out, which is average earning month over month. Average earning was expected to be 0.3%, although the previous month was 0.4%. The actual outcome was 0.4%. What does this data indicate? It indicates that employees are still demanding higher pay because the percentage of the average hourly earning seems to have maintained, although the analysts were projected that it will decline by 0.3%, but actually it has remained constant at a rate of 0.4. That means if more people demand to be paid well, it is an inflationary condition, because it will basically mean that employer have to pay their employee more, and that cost will definitely be transmitted to the final product. The second data is the non-farm employment change. As you can see, the previous month actually 173,000 people were employed. The analysts this month were expecting at least 168,000 people to be employed, but what actually came out was 216,000 people were employed. This is a very good data. It shows the strength and the resilience of the United States economy in spite of the rate hike. So this is a very good figure, and then it clearly means that if more people get jobs, it means more people will have money, it means more people will spend, and therefore the United States dollar will be demanded even more, hence strengthening the US dollar. And at the same time, the fact that people are getting employed, it means there is a high demand of goods and service. That's why people have to be hired in order to be able to deliver what is demanded in the market. And the other data is the unemployment rate. Unemployment rate, as you can see from the figure that is shown on your screen, unemployment rate previously was 3.7%, and the analysts were actually expecting unemployment rate will go up to 3.8, but actually it's maintained to 3.7%. This is a very good figure because it means that employment is stabilized. And one of the reasons why may push Federal Reserve to increase or rather reduce interest rate, if this unemployment rate seems to be going, if the unemployment rate goes up, then it will actually inform the Fed to cut rate, possibly by May or June. But the fact that the unemployment rate seems to be stabilizing, this analysts are beginning to believe that as far as interest rate is concerned, they are actually currently based on the dollar index. As you can see, the dollar is gaining strength. It means we will be higher for longer. That is the reason why United States dollar is keep on gaining strength. Now, what is actually happening in United States? These are figures that show the interest rate. Interest rate initially was somewhere between it was about 2.5%, and they rise interest rate periodically up until it's reached about 5.5%. Now, why were they raising this interest rate? They were raising this interest rate in order to control inflation. As you can see, this is United States inflation rate. Inflation was so high to the extent that it came to a figure of 6.8%. But as the Fed keep on rising interest rate every time when they're having their meeting in regards to the interest rate and the economic condition of United States, they were increasing interest rate. At first they were increasing by 75 basis point, and then they reduced to about 25 basis point, and as they rise, the inflation was also declining in response to that. Why was the inflation declining when interest rate was raised? Interest rate is actually a cost for money. It means that it is very expensive for people to borrow money. Therefore, it has actually reduced the amount that is flowing to the market that enable the consumer to buy goods and services. So if people don't have money, what happens is that the demand for goods will decrease, and if the demand for goods will decrease, definitely the retailers will be compelled to lower the price, and this is in reflection on that. Then again, we have a very piece of information which is actually the target of every government in the world, and that is unemployment rate. Unemployment rate in United States, it has been going down and down and down and down and down up until at the moment we are talking a figure of 3.7. But as you can see, this is 2020, during the time when we have been affected by the corona or COVID-19 pandemic. Unemployment actually shoot to a figure of almost 16%. It was somewhere between 15.8%. That was so high. In order to control this, then you have to to lower interest rate. By that time, they were forced to lower interest rate in order for companies and people to have money, so that they spend in order for there to be a good circulation of money in the market. If you take a look at what has been happening here before 2020, interest rate was somewhere between 2.5, 2.2, and then after we have been hit by the COVID-19, the Fed actually was declining because the market was anticipating something big will come. In 2020, the interest rate was reduced drastically to a lower figure of about 1 point something. That was too low. And after the vaccination have been found, the COVID-19 seems to have been taken care of. Therefore, the Fed decided again to rise the interest rate up until currently it stands at 5.5. Now, the reason why, for those people who are shooting Euro USD, what I've explained here actually resulted to the Euro USD decline as a result of the strength of the dollar very comfortably. As you can see, this graph is indirectly inversely correlated to the demand for bond. Actually, Euro USD, when it's going down, it shows that the dollar is gaining strength, but when it goes up, it means the dollar is getting weaker and the euro is getting straight. So, and if you can also take a look at what the commercials were doing, the non-commercials were doing from the court report, you can see by January, in the month of January, the shorts were only 45%, but the long, those people who were buying US dollar, they were actually more than those people were shooting. That is, they were 54.9%, and that is the reason of the strengthening of the United States dollar, and at the same time it was the reason for the decline in Euro USD. So as a trader, this component of inflation, unemployment, and interest rate play a big role to those movements that you are seeing on your graph. Therefore, as a fundamental trader, what I normally do is that after I have developed bias of maybe American strength, what I basically do, I will always be looking to shoot the Euro USD once I get the nice setup. For example, here as far as the market structure is concerned, and here we have been having a resistance. You know, it has been knocked 1, 2, 3, and then it break. I normally don't get into trades here. I wait first until it tested some people call it order block, some of them call it, I don't know, resistance. This is where I most likely will enter the market, so that because of the price action that is clearly shown here, this area seems to be, as you can see, the structure of the Euro USD is broken, and then it came and tested again up until here. So when it came down, once you enter here, you'll be very comfortably collecting your profit. If you enter this place, and then you can, based on the time frame, if you trade on day time frame, you'll be comfortable. But I mostly prefer trading 1 hour, but I think I have to do some sort of setups in my graph. But if whosoever entered this trade with that tighter stop loss, and even move up to even here. That could have been a very nice and profitable trades. Thank you so much for your time, traders. I highly appreciate. The next video will explain what exactly happened on 29th of January that caused the sell-off of the bond, and later on it came and retested the same area. Thank you for the traders, and I highly appreciate for your time, and God bless you all.